reverse mortgage is a loan. It's a loan taken out against your home when its primary function is to provide seniors with an alternative means of being able to access the equity in their home, which otherwise they wouldn't be able to access without either selling the house or using a more traditional mortgage to do a cash out refinance, or perhaps establish a home equity line of credit. Now, most people with respect to selling their homes at that age, most of them would prefer not to sell their home. I mean, if they've raised their children in their home, if they've been in the neighborhood for an extended period, listen, that's where their friends are. That's where their neighbors are. That's where their church is. So all else being equal, most people would prefer to continue to live in their homes for the remainder of their lives. So a reverse mortgage is not only a loan, it's a non-recourse loan. Watch this. What exactly does a non-recourse loan mean? A non-recourse loan means that at the point in time when the loan becomes due, the borrowers will not be responsible for any deficiency that might be outstanding on that loan. So for example, the reverse mortgage, right? One of the features is that you never have to make a mortgage payment. Never. That's because those costs accrue on the loan balance over time. So that means that whatever future point in time the loan must be paid off, who are they going to look to for the payment, for the repayment? They're going to look to the property for the repayment. And the property is sold and the balance is due. If there's a deficiency in that amount, then that will be covered by the mortgage insurance that's put on there because of the FHA guarantees. The significance of that means that neither the homeowner nor their heirs, if they've died, will be responsible for any loan deficiency. Now, what are the chances that someone could be forced to move out of their house when they have a reverse mortgage? Well, that would only happen if they cease to be the primary occupant of the home. One of the requirements for a reverse mortgage is that does have to be your primary residence. And that's determined by a timetable of at least living there for at least 6 months and 1 day out of the year. So theoretically, you could have a summer home in a different location, a winter home as your primary residence, and still be able to enjoy living in that summer home. But you'd have to maintain residency in the primary for at least 6 months and 1 day. Unlike a traditional mortgage, you do not have to make a principal and interest payment on the home. However, you do have to continue to make payments and cover the obligations for homeowners insurance, property taxes, okay, and any other association dues, which that's just the same as if the house was paid off, okay? So another question would be, people think that they must give up the deed to their home. So you may be asking the question, well, who owns the house in a reverse mortgage? Who owns the house? Contrary again to some of the misunderstandings, the title does not change when you take out a reverse mortgage. The title remains in your name and will include anybody who's been listed as a borrower. Typically, that's going to be a spouse or any other qualified borrower. In the event of your passing, depending on how you set up the estate, then that title would then transfer to your heirs. The reverse mortgage would need to be repaid, and typically it's paid, like we said before, from the proceeds of the sale. In any event, if that title is in your name, you have full control over the home. You can remodel, you can sell it, you can do whatever. Remember, you have full control over it. Now, if you did sell it, that would trigger what is called a repayment provision that would have to be paid. Once it is sold, any excess proceeds over and above the amount required for paying the loan would then go to the living borrowers or to their heirs. If it's transferred in the estate,